that's kind of the problem that I think most people have trying to buy seller financing properties is that the default mentality they bring, and this is going to be obvious. Like, of course, this is the mentality we bring: is I want to buy a property, thus I'm shopping for a property, and now I'm going to ask the seller about seller financing. But with seller financing off market, we need to do the opposite. We need to go shopping for a person and then see what property they own, because seller financing is much more about the person than it is about the property.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Jeff Stevens is the founder of The Thoughtful Real Estate Entrepreneur and host of the podcast Racking Up Rentals. His focus is on relationship-based negotiation for off-market acquisitions with seller financing. Jeff, welcome to the show.
Thanks so much for having me here. I appreciate it.
Absolutely, Jeff. The pleasure is mine. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Yeah, absolutely. I started in, about 15, maybe 17, 18 years ago by picking up that purple book everybody has been inspired by. And I thought, that sounds interesting. So my wife and I had just bought our first primary residence, and I picked up this book shortly thereafter. I thought, gosh, I bet I could tap some of the equity and buy a rental property. So we did that. We bought a triplex. It's very, very conventional, very different than what I would do today, but that got us started. And I'm so glad that I did that deal, even though I wouldn't do it again today, because it really got us going. Fast forward a few years, I decided that I wanted to make real estate more of a full-time focus than a part-time focus. And that was about 10 years ago. And fast forward a few more years, I've really locked into kind of my particular, my little niche, my little approach. And that is buying properties off market relationally with great seller financing terms. And then in the last year, maybe 2 or 3 years, I've become just a good advocate for spreading the message on that, because I feel like this is something that more people really deserve to understand.
No, that's great. That's great. I look forward to digging into the nuances of what you do and how you do it. Seller financing is one of those, I think, pie in the sky ideas for a lot of real estate investors. They're like, oh yeah, you can get seller financing 1 in every 100 deals, but otherwise it's probably not going to work out. It sounds like you have really found a way to disprove that theory. So really, let's get nerdy. Let's get in the weeds. Let's break it down and talk about kind of how you discovered seller financing, the way that you approach it, kind of your thought process behind it. I'd love to just hear your thoughts on that.
Yeah, absolutely. I think my very, very first experience with seller financing was one that I kind of stumbled into a little bit. This was kind of like a pocket listing situation where somebody had called me, and as we had this conversation, it just sort of unfolded, but I didn't have a strong strategic idea about exactly, how to optimize it. I thought, gosh, I can just buy this property and not have to go qualify for a loan, and that's really great. But as I got more into this and I found my own coach and my own mentor, I started to refine this approach. So a couple important pillars of this, I'd say, is it possible to buy a listed property with seller financing? Yes, it's absolutely possible, but it is not going to be the same kind of conversation as if we're doing it off market and doing it in a relationship-based manner. And in my experience, in my opinion, my philosophy is that we will be far more successful in negotiating much better terms for us, but also even just doing a better job of tailoring the deal for the seller too, if we get to see that person face to face. So I, at this point, just completely avoid anything that is listed. I just want to have a face-to-face conversation in a seller's living room. A couple of the things that make seller financing actually far more common, or maybe even possible, than a lot of people think, is that a lot of buyers in real estate kind of think like, well, gosh, a seller, they do seller financing as kind of a last resort. They would always prefer a different outcome. They'd prefer a different plan. So seller financing as a result basically comes in situations when the seller, they just can't sell it in another way, or it's taking too long, or they're going to have to lower the price a lot. And they're sort of doing it reluctantly. But the truth is that there are certain people, while there are many situations that are indeed like that, the truth is there are also lots of people for whom selling their property with seller financing is, once they kind of realize this, and we kind of gently help unpack this conversation for them, they realize this is the best possible way for them to sell their property. And there's a couple main reasons. And then I'll pause there because I think these are really important to hear. First and foremost, seller financing or termed an installment sale is an excellent way for the owner of a property who would otherwise have a big old gnarly capital gains tax bill to significantly ease the pain of that tax bill and defer large portions of it, but without needing to do a 1031 exchange. There's a lot of people I know I've bought properties from that are about 70 and they're thinking these properties have been very, very good to me, but I'm not really in the mood to just trade one responsibility for another. I'd rather get out of this game, but how do I do that without having this big, painful tax bill? Secondly, these people like having income. It's probably why they bought rental properties in the first place. So if they sell the property and then, there goes the income stream. So they like to be able to continue to have income stream. And then the third and final reason is that there's a lot of people who say, gosh, if, 500, a million, $2 million showed up from a closing, I don't even know exactly what I would do with it. That actually feels kind of burdensome to figure that out. It feels like kind of a big responsibility. And you find the right person with those attributes, and it's a great conversation. It works out perfectly for everybody.
I like that. And again, I'll go back to my initial, tell me why I'm wrong, I guess is why I'm saying this, but it sounds like that seller is unique. Is that the case?
Well, they are unique in the sense that if you just go out into the world and stumble around and look at properties that are for sale and then say, oh, I wonder if that person has these attributes, the chances are probably not good.
Right.
But if you're trying to catch that particular fish, you would probably want to go to the places where that particular fish lives, right? So that's kind of the problem that I think most people have trying to buy seller financing properties, is that the default mentality they bring, and this is going to be obvious, like of course this is the mentality we bring, is I want to buy a property, thus I'm shopping for a property, and now I'm going to ask the seller about seller financing. But with seller financing off market, we need to do the opposite. We need to go shopping for a person and then see what property they own, because seller financing is much more about the person than it is about the property.
So tell me, I break that down for us. I don't even, if you told me that right now, said, hey, Sam, go out and find the person and then find what property they own, I'd look at you like a deer in the headlights, like I'm doing right now, and say, how do you do that?
Absolutely. So here's exactly what I do. I know that there's certain areas, my little geographic sandbox, where I want to buy properties, and I'm pretty picky about those. So I define these areas, let's just call them zip codes. And then I say, who are the people who would have the attributes that I just kind of went through? Who would have a nasty capital gains tax problem? An owner occupant of a house? Probably not. Right. But a landlord, a person who owns an investment property and has owned it for a reasonable period of time. Okay, there's my person, right? So now I'm trying to query a list, and I actually just do this with my local title company. I just say, hey, would you please query the public database for the following parameters and send me a spreadsheet? So I say, here are my zip codes. I'm looking for absentee owners of this type of property. Like, let's just say in this case, with your audience, I'm looking for 5 to 8 unit buildings. Like that's one of the categories in my county's tax records, is 5 to 8 unit properties. Okay, so I'm looking for this zip code, absentee landlords, which is going to be most of them in this case, 5 to 8 unit properties. They've owned the property for at least, say, 10 years. Send me the list. And they send me the list. And now this is like my pond. I'm about to go fishing in the pond where there's real reasonable chance that these people are going to have these attributes I want. Right. The next question is, how do I reach out to them? And my strategy is to reach out to them with a dead simple, it's very strategic, but dead simple at the same time, personal, nice, unbelievably low pressure letter that just says, hi, my name is Jeff. My wife and I have a couple rental properties. We're actively looking for another one that we could buy and manage ourselves. I came across yours at this address. I was just thinking, if you would ever consider selling it, would you give us a call? It'd be lovely to just discuss it face to face with you. It's pretty much as simple as that. And that initiates phone calls where at that point, when our phone rings with that seller, pretty much always we're the only person on the planet who knows that that property is even in play, because these aren't people who have raised their hand. They haven't stuck a sign out front. They haven't hired a broker. It's not on the internet. Now we're just having a one-on-one conversation.
How do you do that at scale? Like or maybe you don't. Let's ask that. Do you do it at scale? And if you do, how? And if you don't, why not?
Yeah. So I think scale is relative. I would say we send probably, 1,000 letters a month would be. So I'm not sure if that's,
That's a
considered
lot. Yeah.
scale.
Yeah.
I think that this business, that at least the business that I'm in, and I'm guessing a lot of your listeners here too, we don't have to have a volume game. I mean, this isn't a whole, residential wholesaling thing where I need to turn 30 properties a month. If I can buy 4, 5, 6 great properties a year in this particular manner, that's a great win for me. So the one of the things that people, I guess, push back on, they say, well, it doesn't sound like real conversations with people isn't scalable. Do I have a acquisitions manager of this? And I would say, yeah, I mean, because real relationships aren't scalable. I mean, I don't outsource the scaling of my ability to have more friends either. I actually just invest in those relationships, knowing that these are very valuable things, and it only takes a couple great ones to get huge wins.
Right. No, I think that's powerful what you've just said there. It's also building a business the way you want, and I think that's, and I'm turning left here in the conversation, but it's so oftentimes I hear from other investors, and just kind of the general vibe is that like bigger is better, and we just get bigger for bigger's sake without any real understanding of why we're actually doing what we're doing. And for you
Yeah.
to say, hey, look, 5 or 6 of these a year is plenty. That's all we need. I think that's really,
Yeah.
really powerful to know kind of what your parameters are there. When I mean 1,000 letters a month in that 5 to 8 unit range, I think is a lot. Just in the sense to finding that many owners that own those types of properties. I love what you said there though about having a face-to-face conversation. I think that are there anything else that you really put in that letter that makes it stand out? Is it handwritten? Is it, I mean, because all of us get, anybody that owns property, I'm sure you do too, get
Mhm.
the letters in the mail, and you're like, okay, I've seen this 8,000 times. It's the same
Yeah.
inking letter I've seen my last decade, and you
Yeah.
pound bend them. What do you do
Yeah.
differently?
Yeah, absolutely. So one of the funny things I love, I experience this myself all the time, and then my clients who I'm coaching, I experience this all the time too. There's actually two things. One is somebody calls you back from your letter, and then they say, I get letters like this all the time. I've never called anybody back before, but I'm calling you now. Something just felt different. And then the second thing is you'll get a call, 9 months, 2 years, 3 years after you sent the letter, from somebody saying, I got the letter. The time wasn't right. I stuck it in a folder though, and now the time is right, and I'm calling you back. And I think the thing is that they're doing that because it's worth saving. And the reason it's worth saving, the reason it's cutting through the clutter, is because it is really clear it is coming from one regular person to another. And this part is really important, in my opinion. We're positioning ourselves as peers, right? Most letters that real estate investors send position themselves as, we have money, we have clients, you kind of look like you might be the gazelle down here waiting to get taken down. We are the lion, sure, all cash, close fast, right? And that puts people on guard. But if you send them a letter where the power dynamic is balanced, you say, hey, I'm a local landlord like you. My wife and I have got a small business. We'd love to buy another property. Anytime you want to call, it'd be awesome to chat with you. It feels very, very safe because they're thinking like, this person is like me. They're not here to, they don't see some crazy opportunity, to exploit me. We're just having a conversation.
No, I think that's great. That's really, really great insight on that. One of the things that we talked about off air was that you said, or before we started recording this, you said that the best way to get seller financing is to not ask for seller financing. Now you're going
Yeah.
into this transaction, or into this pond you're fishing in, with this idea that in the end you want seller financing.
Yeah.
Talk me through that line of thinking.
Yeah. So to me, the number one mistake that buyers make trying to get seller financing is that they show up and they make it just ridiculously obvious that this is what they want. Like, they might as well be wearing a t-shirt that says, I want to buy your property with seller financing.
Right.
And so there's a couple of things here. The first thing I'll say is, categorically, humans anywhere on any topic, what ideas do we like best? We like our own ideas best, right?
Sure.
And so when we show up and we just sort of like right out of the gate, we're like really obvious, like, hey, I'd like to buy your property with seller financing. it's like saying, this is my idea, which then, leads to the very obvious natural next step, which is like, because it would be good for me. But if we can have this conversation in a way such that we're actually kind of eliciting the insights and the information from the seller, such that when we make a proposal, I don't make offers, I make proposals. When I make a proposal back to them that involves seller financing, it feels like a prescription that is perfectly tailored to the diagnosis that they just told me. Like we just discussed it, themselves, right? And so when if you just show up and say, I want to buy your property with seller financing, like the enthusiasm is great, but it raises questions in people's mind. Like why does that person do they need seller financing? Oh, they must have bad credit. Oh, they don't have enough down, blah, 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 all this kind of stuff.
Right.
But if we just like exhibit a little patience and a little bit of skill in asking questions that get people to say the things we need them to say out loud, now we're talking, right? Because I know if I can get a seller to talk about how they want to, this is the most common thing in the world for me. A seller says, I'd love to sell this property, but man, I'll tell you, the taxes would fricking kill me. Right. I know I want them to say that. So how do I open the door so that they can just walk through the door and say that thing? Right. So I might say to them like, oh gosh, you've had this property for a long time. Are you just planning to do a 1031 exchange? I might just say that. It's like a question that's not a question.
Right.
I mean, it's a question, but it's more like a statement, and just sort of let them go, oh no, God, no, we're, real estate's been great to us, but we're done. Oh, really? Now I'm like tucking these little insights back in my head so that when I come back to them with a proposal, I was like, I was thinking about how you were telling me how you don't really want to pay the taxes, but you also don't want to do an exchange. I think I've got an idea that might work for you.
I like that. That's and those are the information gathering stage, I will say, of that relationship. How many of these deals on the seller financing side have you come across where you're like, Jeff, love this deal. The seller does not want to do seller financing. How do you gracefully walk away from that? And or have you then turned around and said, let me find an alternative way to get this closed?
Yeah, my strategy for buying, my approach to buying is that I need there to be something awesome about every deal. I call it find the awesome. Like the awesome could be, wow, the rents are half of what they could be. The awesome could be the zoning that would allow you to build a whole bunch more units or some other form of expansion. The awesome could just be like this incredible location or beauty or romance of a building. The awesome could be any aspect of the financing. So to me, I need to have some kind of awesome. So if I'm talking to a seller and it's seeming like seller financing is not the prescription that is matching their diagnosis, basically, to put it that way, but there's some other awesome that I have found, then yes, I will certainly be willing to pivot. I always hope that that's not the case, but yeah, I would hate to pass up what is an amazing opportunity in a different way or seen from a different angle simply because of that.
Got it. Okay. Yeah, I guess that was the question there was, do you let deals go because they're not seller financing? Clearly that's not the case. Interest rates have just been skyrocketing. I mean, I think the power of the dollar is it's declining rapidly. People's purchasing power is going down. How have terms changed on the seller financing side of things, maybe relative to even a couple of years ago?
Yeah. So this is a great question that really also speaks again to some of the, I would say, misconceptions about seller financing. In my experience, a seller is rarely thinking to themselves, okay, I'm going to be the bank. Let me see what US Bank is charging. Let me see what Wells Fargo is charging. It's going to have to be 25-year amortization because that's what the commercial loans at the credit union would be. In my experience, it's not that conversation at all. It's actually much more about what works for them and kind of what works for us as buyers and the deal. I don't think there's any natural correlation between market interest rates or down payments or LTVs or anything like that with sellers. A great example of this would be if I'm looking at a seller financing deal and I'm seeing that their rents are kind of low. And that's one of the reasons I like the opportunity. I'm actually asking myself, like, what are they netting each month right now? Right. I'm doing the math, gross rents, these expenses, whatever expense ratio. I think they're netting this amount right here. Now I'm also figuring out then, of course, what is my note likely to be? Let's say I'm going to put 10% down or whatever. So my note is going to be this amount. In many ways, I'm actually reverse engineering my interest rate simply so that I can show up at the proposal meeting and say, okay, I've got a proposal that gives you the same net income every month that you're getting right now, plus gives you a little down payment, plus removes all of the hassle of management, and does the most important thing you said, which is to defer your capital gains indefinitely into the future for the term of this loan. And so if the answer is like, I'm proposing a 3.5% interest rate, I'm not really proposing a 3.5% interest rate. I'm proposing a, $2,700 payment. It just happens to be a 3.5, right? So I'm seeing what's actually most important to them, because there are sellers who will say to you, 5% is what's important. Like, they have no idea what that payment amount, but for some reason, 5% is the number. Like, okay, well, then I guess we'll work with 5%, and then we'll play with the other variables, right? That, you know what I mean?
Yeah, no, that makes a lot of sense, and I like the way you think through that. That gives a lot of color to that. Let's talk one last topic here before we have to sign off. But you were talking about, how'd you put that? Refinancing a good property or repropertying a good fine. Maybe you could explain that to me in more detail.
Yeah. It's so funny. I was just taking a walk this morning and had this epiphany. I was like, oh my gosh, this topic that I talk about all the time, I've never said it in this exact way before. So what I was saying is, everybody knows how to refinance a great property, but very few people know how to reproperty some great financing. So here's this. So this is going to be, since we only have a couple minutes, this is going to be like the little bit of a teaser, head scratcher, but hopefully wonderfully enchant people as they leave this podcast episode wanting more. When we buy a property with seller financing, we're actually buying two things. We're buying the property and we're buying the financing.
Right.
These are two things that they come together as a package, but do they have to stay together as a package forever? And the answer is no, because a seller financing loan is infinitely negotiable and tailorable and customizable, right? If we get a loan from a bank, a major part of that deal is a 3-word expression we all know: due on sale. Well, a seller financing loan does not have to have a due on sale clause. In fact, a lot of sellers, a due on sale clause would hurt their interests overall. If I buy a property from somebody who wants to defer their capital gains for the next 20 years in this installment sale, and 6 months later, I think I'll refinance it, I have just really screwed up their whole plan, right?
Sure.
They don't want to get paid off early. And frankly, if it's a great loan that I've negotiated, I don't want to pay it off early anyway, but I do need to maybe refinance my property. I certainly need to have the right to sell my property if I want to. And that introduces the opportunity for us to negotiate. This is something I call supercharged seller financing, a term, a clause, an element of our promissory note that says that the maker of the note, that's us, the borrower, has the right to provide a different piece of real estate as collateral, as long as the new piece of real estate also has enough equity and enough cash flow to make the payments. But we can substitute the collateral that secures the note, which is a substitution of security clause. So I've bought the property and I bought the financing, but there are scenarios in which I buy the property and I buy the financing. I'm like, yeah, the property is okay, but the financing is awesome. What if I just want to get rid of the property, but keep the financing in my portfolio? We all know the idea. So, bringing it full circle here, we all know the idea that you have a property and you can constantly be changing the financing on it. But what if you had financing that was awesome, that you could constantly be changing the property that secured that financing? And when you do that, it opens up a real world of like deal structuring possibilities. It's a little bit mind blowing.
That is absolutely mind blowing, Jeff. This has been awesome. We'll need to have you come back on, and we'll do an episode just on that kind of thought and process and how that even practically works out. It sounds very, very interesting and intriguing. Certainly appreciate you coming on today. Learned a ton from you just on the way that you approach seller financing, the way you find the properties that you're looking for, how you go to the title companies and have them pull records. You're a wealth of knowledge, and I certainly appreciate it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, thank you so much. Yeah, I would say check out my podcast, Racking Up Rentals, which you mentioned before. I really appreciate that. And then I'm also really quite active on Facebook, and we have a small community private Facebook group called Rental Portfolio Wealth Builders. It'd be great to see people there. And
Fantastic. We'll make sure we include all that there in the show notes. And Jeff, thank you again for coming on today. I certainly appreciate it.
Thank you so much for the opportunity.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.